And the stock is moving, and it is a significant move higher at the moment, nearly 8%. The reason being, yes, they lost subscribers, and they lost nearly 1 million subscribers in the quarter. That was half as much as the street was looking forward to. And you remember the last report, which was really a bombshell of the entire season. They reported a big loss. The stock absolutely cratered. Julia Borston is looking at this as we speak. Julia, what do you see? But it seems as though the subscriber number better than the street is the reason why the stock is having such a good moment here in overtime.
Yeah, we see the stock up 10% in after-hours trading, and that does seem to be a direct reflection of the fact that instead of losing 2 million subscribers, which is what the company forecast it would lose in the second quarter, it only lost 970,000. I say only because in comparison. So it lost about half as many subscribers in Q2 as expected. But interestingly, looking at the Q3 forecast, the company does see it returning to subscriber growth, forecasting the addition of 1 million subs in the second quarter. But analysts, the consensus among analysts was that the company would add 1.8 million subs in the second quarter. So it seems like there's a little bit of a sigh of relief here that not only does the company expect to keep growing again in Q3, but that growth will be 1 million, though less than anticipated. I just want to get to the top and bottom line results, though, since we are so focused on those sub numbers. Earnings beat estimates. The company reporting earnings of $3.20 per share versus an estimate of $2.94 per share. Revenues missed estimates, but not by much. Revenues coming in at $7.97 billion for the quarter versus the $8.04 billion estimated. So the stock's now up about 8.5% on that earnings beat, on the fact that those Q2 numbers are better than anticipated. I'm going to read through this letter to shareholders from Hastings and Sarandos, and I'll be back to you in a minute with more, Scott.
All right, good stuff. I anticipate that we'll hear from you momentarily. Julia Borston, thank you so much. Joe Terranova is here with me right now. You got off the Netflix train in November.
I did.
And one of the best saving trades, I think it's fair to say, that you've ever had.
Certainly within the last 10 years. Loss preservation is very important. Given Netflix, where we are right now, you have to think about buying the stock. This is not a value trap. This is now a company that was a growth stock, which is pricing as a value stock.
Wait, you were worried that it was a value trap?
I don't believe. I think the street is worried that it's a value trap. I don't think this stock is a value trap. I think this is a stock that is right now exhibiting itself to be a value story, but the growth has the potential to return once again. What's the negative narrative? Potential consumer recession.
Right.
And then market
softening demand. Don't forget, Julia just told you the expectation was for 1.8 million subs. For the third quarter, they project 1 million. So that is below what the street was looking at. You do have this sort of post-pandemic normalization that the bears would suggest is still a headwind, along with what you just mentioned, a consumer slowdown, if not a recession.
So the guidance is not excellent here. The guidance isn't good. I'll acknowledge that. They're also talking about currency impact. Worse than expected, $330 million.
Yeah, get used to hearing that.
Right, $339 million hit. They're also, I think, doing something with an animation studio. But the point I'm trying to make here is I think there has been enough negativity priced into the stock where now you're thinking about it strategically as being classified as a potential value trap. And I just don't think that's the right way to think about this. The introduction of the ad model leads to potential in coming quarters for there to ultimately be growth. So this is stock, does it belong trading above $300? Probably not. But this is also a stock that doesn't belong trading at 175, 180. I would be more inclined to buy this stock and expect it to rally towards 275 in a better market.
Okay, so
needs a better market also.
You